Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Excuse me. Today is November 30th, 2024, and this is a special episode where I'm not going to talk about a general market update. I'm going to show you something quite specific. I'm going to talk about how I short the market. Okay, I'm going to be using the FEMX exchange. I'm not going to go into the exchange per se, but I'm going to be using certain assets that are found or perpetuals in the FEMX exchange. And I'm going to show you technically, that's the most important part of this video, technically how I safely short the market. Okay, the premise of this is that looking at Bitcoin and having done our Bitcoin analysis, we envision a significant move down in the market, given that Bitcoin is likely at a local market top. All right, and I'm not going to talk about that. The video I made earlier today talks about that. I've made so many videos about that. I've been making a bunch of videos about that. I mean, it's quite clear to see. Look at your stochastic RSI momentum indicator on the daily. It's about to cross bearish all the way down in oversold territory. Okay, zoom in really quickly on the 4-hourly time frame. You can see that we put in a bearish reversal pattern over here. We're likely putting another one in over here. Zoom in a little more. Hourly time frame. And you've been going sideways for a few days now, and it's likely that we're putting in this inverse head and shoulders pattern. Okay, so the idea is using, once again, Bitcoin as a proxy for the cryptocurrency markets at large. Why? Because if Bitcoin is doing something, that's the trend. Bitcoin establishes the trend. The safest way to trade in crypto, in my opinion, and there's a lot of supporting evidence to back this, is do what Bitcoin does. If Bitcoin's going sideways, then, these altcoins may go sideways, they may go up, they may go down. It's safe. It's a kind of a neutral environment, more or less. But if Bitcoin's going up, then other things may go up. If Bitcoin's going down, other things are likely to go down. It's very unlikely. It's very rare that Bitcoin's going down and something's going against it, okay? So we've seen in the past few days a high likelihood, my read on the market is the high likelihood of Bitcoin breaking down. And our first target is down here. We talked about that. All right. So it's with all of this in mind that I'm even thinking about shorting the market, okay? So I'm waiting for Bitcoin to come down here to this support right here, multi-year channel, the top of this multi-year channel, so around 80K, okay? And so this move in Bitcoin, that reflects about a 14-15% move, I'm looking to take advantage of in the altcoin space. That's the premise. Now, what are we going to short? All right, we have a whole watch list of assets, and like I said, I use FEMX to trade. How am I going to short the market? You can't short the market unless you do it with perpetuals. Obviously, one could say that not going long or not buying is a way to short the market. It's true, but I'm talking about actively shorting the market with leverage, even if it's a 2x leverage. So, if you don't know how to use leverage, you could learn how to do it. None of this is financial advice. I'm just showing you what I'm doing. I don't know. I felt like it was interesting, and it's not something that I talk about every day, because shorting, the technique of it is quite intricate. Even longing is as well. I don't talk about that much either. So I'm going to go into the how. I think it's interesting. It's something I've developed over the years. So first thing I would do is try to minimize risk. What does that mean? So first way to minimize risk is identifying the larger trend that Bitcoin establishes. Then you don't want to short close to support, just like you don't want to long at resistance. Does that make sense? Let's look at an example. Let's look at Cardano. All right. Cardano on the high time frame has gone up quite a bit. Okay. And it has clearly hit its head against this many months long resistance. Okay. Yet and still, there are people buying at resistance. You don't want to do that. That's basic, fundamental technical analysis. Once you reach this level of resistance and you identify it on a high time frame, you start looking for the price to reverse, and then you start looking for support below it. It seems common sense, right? You'd be surprised how many people all over the all over social media, X, whatever it's called, are calling to long Cardano based off of what it's done, not based off of the analysis that it's at clear resistance. So that's the first thing you want to do. You don't want to short anything that hasn't reached a clear resistance, because that's very dangerous, because at that point, you may get hit with the move that's looking for that next resistance to the upside. Do you understand? So it's safer to hit something at resistance, just like it's safer to long support levels, right? Go long on support, go short on resistance, rinse and repeat. And I'll also add that in a bull market, generally speaking, the trend is up. So you want to be extra careful shorting the market. I think that the bull market starts after this retest. And at that point, it's very rare that you'll find me shorting the market, just because things are going to go absolutely mental. But at this point, I feel like it's still safe, and things aren't popping off 50% in an hour, 100% in a day type thing. So shorting the market isn't kind of asking for it. It's not that crazy. So that's just an example of what you would do with Cardano. And then you would zoom in, try and find where to put your stops and enter your short. Simple. Now, let's get into the weeds. Why am I not shorting Cardano? Cardano's not bad because, one, it's at clear resistance on the high time frame. Two, your profit is a decent profit based off of what it's likely to do. If it comes anywhere down here, which is the next logical support where it could find actual support to the downside, that's a nice 60% gain to the downside, okay? So that would be a good candidate. You don't, again, want to short anything that's not at resistance, and two, it's not worth the effort. It's not worth the squeeze, right? If it's like a mini move, it's not worth all the work and risking your position, potentially getting it wrong, which you can, right? You can always get these wrong. So it's a risk. I am going to then look and screen. I talked about screening earlier for shorting things that I could short that I can get even more benefit, that have pumped even more. So what do? I go in my crypto fair screener. So what I did is I screened for only things that are on Femex, because that's what I use. So only perpetuals, right? As you can see here. And then I put for the biggest gainers. And I could see that XLM, Algorand, XRP, HBAR are my biggest gainers in the month. Okay, I asked for biggest gainers in the month on Femex. That's what I used in the screener. So I pulled those charts. And I was particularly intrigued by two, XLM and HBAR. And I'm going to show you why. All right. So let's start with Hedera Hashgraph. So why am I keen on shorting this? Again, you want to look for a high time frame resistance. So here you can see that this region right here, I'm going to pull out my rectangle. This region right here is clear resistance for H bar. You came from down here, you went into this range, you bottomed, and you hit the resistance of the range. Okay, This is both the top of the range, a multi-month range that you've put in since June, and it's the phi ratio, the 0.618 of this trend down here. So you know that the 0.618 or phi ratio, the golden pocket, the golden mean, is resistance when you're below it and support when you're above it. We're currently below it. So this is good macro resistance that I would look for. That's the first thing, okay? The second thing, and why I'm particularly intrigued by H-bar, not only was it a big gainer, so I know that if it went up, it's going to come down quite hard. When I zoom in, I really like how it's distributing. And this goes back to our understanding of distribution channels, right? Again, anytime you go from up or down to up or up to down, you have to put in a channel of consolidation. The channel of consolidation from down to up is called an accumulation channel. The channel of consolidation from up to down is called the distribution channel. So you can look at it in terms of a Wyckoff and that accumulation or distribution, or as I like to, you can look at it in terms of 2 degrees of AB basing and a pivot, or 3 pairs of corrective patterns. I like that. I prefer that way of analyzing my ranges because I can mathematically determine stop losses. So, invalidation points. So here, this big doji is my initial breakup structure. Okay, that means it's the first, all right, that's it for the trend, right? Boom, boom, boom. That is my first invalidation. So I like this as an A, counter, B. A, counter, B. I think that's a composed counter. And right now, I think that this is an A, and I'm looking for a counter B up here. So I'll let you know what this looks like. I have 2 such graphs, so this gets intricate, and this is why this is not for everybody. This is a very technical sort of video. I have the chart of Hedera hash graph on Binance because it has the most history. So I can really see everything, and I can make sense on a high time frame of what it's done, what it's doing, what it's likely doing, big resistances. But if I'm trading, because I'm trading on Femex, I am going to get the Femex chart specifically to specifically see, and as you can see, the Femex chart is truncated, i.e. it doesn't have all the history. So if I was only looking at the Femex chart, right, you could see H-bar, linear perpetual futures contract, 1 week Femex, right? I don't know what all this is. I don't know what this is. Do you see? I could only make that determination on the Binance chart with the full history. Now, I go to the Femex chart because once I start trading, I want to get really precise with my levels, really precise with my prices. So when I go into my Femex exchange and I set my sell orders and my stop loss, I know exactly that it corresponds to the penny to what I'm seeing on the chart. I hope that makes sense. I learned that later on in my trading career, that you want to be precise and use the actual chart corresponding to the exchange that you're trading on. In any case, you can see here you have this channel, and this is the resistance I have in red of this channel, okay? That's the resistance of the channel, the upper resistance. And again, I like this as my count, my initial break, my counter. This is my secondary break. Sorry. How does this go? Initial break. Oh, counter. This is my A, this is my B. This is my secondary break. This is my secondary counter. I think this is my pivot right here. And so I'm waiting, and this is a flat correction, so I have my alarm set at the 786 of this right here because I know that's the minimum that this needs to go up for my thesis to be correct, for this to be my initial break of the pivot, if that makes any sense. I hope I'm not losing anybody, but basically I'm waiting for this to come up to at least here, and it can go further, But based off of this right here, I set my stop loss to be the inverse 1618 inverse phi ratio of that. This right here, 20.264 cents is my invalidation point of this whole thesis. If 20.264 breaks, that means this is not what I thought it was, and my short is unsuccessful. I could try again, but I minimize my risk by already setting a stop with my whole thesis. But if it's correct, here's what happens. Let's go on the 4-hourly time frame. If it's correct, then looking at this chart, it's very likely that I'm coming all the way down here. All the way down here to put in a nice 786 retest that would retest the top of this multi-month range as support. So you broke up. This is breaking resistance. This is the retest of that resistance as support before you come on. That is a very nice trade, yielding about a 67% profit. Does that make sense? And if you use leverage, obviously, because you're going to, because it's a short, you have to do it using perpetuals. You 2x it, that's 120 something percent profit. You 3x it, that's 180%, and so on and so forth. So this is the idea. This is how I would enter a short, and the rationale behind it, the technical strategy behind it, how to set stops, so on and so forth. I hope that wasn't too inaccessible for this audience. And if you enjoyed that, or if you want more of that, I can talk more about my actual technical trading as opposed to only just analyzing chart patterns, right? I could talk about how I trade and what trades I'm taking. Let me know if that interests you. But I'm going to try not to make this too long, so I'm going to cut it here. All right, take care, everyone. Bye.